So last week, I was talking stocks, bonds, commodities, and I was showing you a very simple way of taking a formula, taking a very simple formula to help give you projections, future projections of where runners could end up going. And when I talk about runners, I'm talking about trends. Now, we can use this in trends and trend extensions and even in swings, but we're looking for an overall trend to be going higher or lower in order to do this. If you remember, we were taking a look at SPY, TLT, USO, GLD, among others. And I talked about an extension formula where you take the high, the most recent high, minus the most recent low. And what we're doing is getting that range. And we're taking a percentage of that range and adding it to the high to get what could be called the extension high, right? And I was using examples of, if you took, let's say, 400 minus 300, you take 100, take 38% of 100, and then I remember looking at the SPY and going, wait a minute, the SPY is at 500, and we could take 500 minus 400, which was the high to low, add 38 to it, and we were looking at about a 538 extension level. So we're going to take a look at those that I was showing you last week and where we've come in just 1 week's time. SP 500, SPY, we had an extension level based on last week's 521 number. We were looking at around 550 as the extension level from the 38% out to 61%. And 550 was the 50% extension off of a 500 move. So where have we gone since then? Well, this is the chart coming into this week. And this week's chart, I added in some channels just to add in a little bit more confirmation, or maybe not. And in this case, the channels are confirming what the trend is already telling us, what extension levels are trying to predict for us. And look at this, is very interesting. So you take a look at, I've got this red chart here, which is long-term, and I've got the green. It's hard to see it, but there's a little green in here. This is the intermediate term, kind of pausing. But we're showing a lot of that happening right here around the breakout area, which is 531.19. Now, that's a new breakout level because for the last few days, we've seen SPY make new all-time highs. And so if you look upward in the longer-term channel, that comes in right around, guess where? 550, exactly where the 50% extension was that we were talking about last week. So not only is the Fibonacci extension at 550, but the channel extensions, basically taking higher highs and higher lows and drawing those channels out, are also telling us that 550 looks like an interesting top for SPY. You know what else 550 is? It's a round number. Round numbers also make for good tops. Okay, moving on. Here's the bond market. Last week we were looking at the TLT, and we were looking at a high to a low, and we saw that high to low move, and then we saw the move upward, and we were looking at this as a potential pullback. And if we were to look at extension off the move lower, then we were looking at extension somewhere down around 86. Let's fast forward to this week and see what the channels are telling us. So channels are also showing the top that occurred back at the end of the year, also showing the lower highs and lower lows, but yet I've got a long-term in blue, I've got my medium-term in green, and I've got a short-term channel in red. And the medium, short, and long-term are all topping out around the middle of last week, right around the level of around, I'm going to call it 92.5. Since then, we've dropped lower. We're down to 91.03. The long and short-term channels are conflicting. That means that we've got the longer is lower, the short-term is higher, intermediate's going sideways. But they're all topping out around what happened last week. Now, if that indeed is a top, guess what it's showing us we're going lower to then? Back down here around, guess where? 86. So another area, 86 to 85, an area where the channels are showing that the markets could move lower too if we take out that. Really got to get below 90 to see that potentially happening. All right. Last week we talked about oil, and we talked about USO, United States oil, that was coming out of in this case, it was an Elliott wave move. We saw a 3 high back in April. We saw the pullback. This was it was a 49% pullback. from that low move from the low to the high. 49% pullback, almost a 50% pullback. But then we saw extension moves, Fibonacci extensions and Elliott wave extensions, which took us up from around 86 to around 92.50. So really right around the high 80s, you want to call it right dead center. What is this week telling us? This week is also telling us, guess what? We're seeing confliction. We are seeing the confliction between the long trend, which is up, and the intermediate shorter trend that is down. But we see a low that came in around, we're going to call it 74. Since then, oil is moving higher, and it has been moving higher since about midweek last week. And where are the new highs likely to take us? Look here, 86, 87. Again, right in the middle of what we were looking for, lower to middle of last week's moves. So again, we're getting confirmation that technically oil wants to move higher. Now we can add on the fact that we have a seasonal bull, which we've talked about for a couple of months now with crude oil and with USO. So all that being said, I still like oil to move higher during at least the beginning summer months. Finally, we talked about gold, and we talked about gold coming off all-time highs, pulling back. 27% was the pullback. We did see higher highs later on into the month of June, maybe even the beginning of July. That takes us all the way around 235, 232 to 238 was the extension levels we were looking at on GLD. Let's fast forward and see what's going on as of this week. Well, we did come back up, and we have hit all-time highs. It was even last night I was looking at gold making new all-time highs into today. This more than likely will be eclipsed, and look what the channel high is, 235, right in the middle of what we were looking at just last week. So there you go. That's stocks, bonds, and commodities. I want to finish out with cheap IV. So last week I said I would talk about cheap IV, and here we are. Cheap IV, what we do is we take a look at all optionable stocks. Every stock that has an option, that has option chains associated with it. We're able to reverse engineer, taking the at-the-money options that also slightly in and slightly out of the money options. And we perform, but when I say reverse engineering, we perform some calculations to get the implied volatility levels of each of those. We then look at what we call the average of the near money options. We timestamp those. So each day we have a different IV based on price and based on time to expiration, based on the movement and perceived movement of where that's likely to go. That's all incorporated in the time value. We're able to get these implied volatility numbers, and we're able to get a range, much like temperature ranges. So if it were, if cheap were cold and expensive were hot, right now, these are the top 10 coldest, cheapest, optionable stocks that are out there. So if you like these as a bull, or you like these as a bear, or any of these, take a look. Apple's number one, cheapest it's been in a year. Its high in the last year was 31.7% implied volatility. The lowest it's been in a year is 16.63% implied volatility. Look where it is today, 16.63. It's on its one-year low, right? So is the Russell, the IWM Russell options. So is Amazon one-year lows. So is Planetaire one-year lows. So is Bank of America and Wells Fargo. So we've got not only technology stocks out there, we've got bank stocks out there. Here's Uber. I call Uber a technology stock, even though, it's basically taxi cab driving. 1 year low in implied volatility. You got Microsoft on here at 1 year implied volatility. ExxonMobil popped in here. All right. The only oil company of the bunch that's on 1 year lows for implied volatility. And to round out the top 10, Cathie Wood's ARK Fund is at 1 year lows in implied volatility. So once again, when I look at these folks, what do these all have in common? They have cheap options right now, the cheapest time value that they've been in the last year. And I'm not talking cheap in price. I'm talking cheap basis on their time value as a ranking of where it's been all year long. So again, If you're bullish, great time to buy call options on any of these stocks. But if you're bearish, if you're looking at any of these, you're saying, I think it's going lower, it's a great time to either put outright put plays on or puts for protection if you own the stock.